Are you tired of working 9 to 5 for a paycheck that hardly covers your bills? For how long are you going to be a part of the rat race and remain in the same place throughout your life? And if you're wondering how to get out of the rat race by stock market investing, then you're exactly where you need to be. Today, we bring you the different stages you need to pass through in order to earn that first million. Before we move on, make sure you press the like and subscribe button so that you don't miss out on anything related to stock market investing and passive income. Welcome to 5-Star Finance, the place where we teach you about financial freedom. Alex is a student of the University of Southern California. He is an intelligent student, and like his father, he is majoring in civil engineering so that he can work in a renowned construction company. After graduating, he got employed by a top-notch construction company, but interestingly, during the starting few months of his job, he discovered that he wanted something else from his life. He can't just rely on his 9 to 5 job for his financial freedom. He needs to generate some passive income and start accumulating in his asset column. In this video, we'll tell you about the stages Alex went through in order to achieve his first million. Remember that if Alex ignored the idea of investing and continued to depend on his engineering paycheck for financial freedom, then Alex would have been stuck in the rat race throughout his life. You will learn what Alex focused on in the world of stock market investing and in the world outside the stock market. Stage 1. How Alex went from $0 to $20,000. During the quarantine, Alex's mother asked him to bring a novel from the library. When Alex was busy looking for the novel in the library, he stumbled over a pile of books. Everyone started to giggle on seeing this. Even the pretty redhead on the counter started to smile on this. But most importantly, when he was reassembling the pile of books, he found a book titled The Richest Man in Babylon. A line on its cover, which caught Alex's attention, reads as a assured pathway to happiness and prosperity. This was exactly what Alex was looking for. He borrowed the book and started reading it. The most important lesson he learned from this book was to pay yourself first. So he started saving 10% from his paycheck on a monthly basis. The next book he read was Rich Dad, Poor Dad by Robert Kiyosaki. And he learned a lesson that he should convert those savings into valuable assets so that he can make money work for him. After acquiring substantial knowledge, he invested $5,000 in a nanotech company. And before he knew it, his $5,000 was converted into $10,000. This was a big step for Alex, but after some time, something bad happened to Alex. He lost all the money, and now he was sitting on negative $7,000. He went from the peak of Mount Stupid to the Valley of Despair. Although he didn't know about Warren Buffett, he was now well aware of his first rule: never lose your money. But there was a significant change in Alex's personality. He started to read financial books, listen to podcasts, and his favorite financial teachers on YouTube. Slowly but surely, Alex was coming out of the Valley of Despair. He saved $20,000 in a short time span of 2 years by saving money from his job. Stage 2. How Alex went from $20,000 to $100,000. When Alex was in his third year at the construction company, his dad wanted to have a little talk with him. His dad wanted to lend him an extra $10,000 because he wanted Alex to buy his new place. This, Alex's father thought, can be an opportunity for him to enjoy some luxury. Although Alex didn't know about Charlie Munger, he knew that the first rule of compounding is to never interrupt it unnecessarily. Luckily, Alex did know about Robert Kiyosaki, who had written the book Rich Dad, Poor Dad. He remembered that a house is a liability, and you want to spend on assets rather than liabilities. Alex rejected the offer, but now he was feeling a lot more confident. He knew now he could afford some luxuries because he was gradually growing in wealth. He was aware of the fact he shouldn't celebrate this early. You don't want to halt the progress made by compounding now that it has really started to hit that gas pedal. By the time Alex was 27, he really got interested in company analysis. He began looking for good investing opportunities. He understood the reasons behind his failure in nanotech companies. Now he was looking to invest in businesses he understood to the fullest. Instead of looking for miracle investment stocks, he began looking for simple yet profitable stocks by following Warren Buffett's mantra: I don't look to jump over 7-foot bars. Instead, I look for 1-foot bars that I can easily jump over. Interestingly, Alex picked up Google stock when the company was on a low PE ratio. Similarly, he also bought Microsoft and a bit of Walmart as well. He recognized that making mistakes can prove costly, and such mistakes can send him back months or even years on his road to financial freedom. But eventually, there was a remarkable change in Alex's personality. He began reading more financial books. He was also working at his regular job, and as the time passed, he was saving $1,500 from his passive income portfolio every month. Alex started to notice that the snowball had really started to roll. Stage 3. How Alex made his way to $1 million. When Alex turned 29, his friend Steve, who invested in a startup, had accumulated some serious wealth. Interestingly, Steve also asked Alex at that time, but Alex played it according to the rule and remembered the mantra of Warren Buffett. Steve flaunted his new car, wore expensive clothes, and had an expensive lifestyle. Meanwhile, Alex was living his same old life. Steve invested in that startup without understanding the business model, and it was his luck that carried him above the clouds. Time passed, and one day the stock market crashed. Technically, Alex was back at $82,000 and he was livid with himself. But Alex didn't give up because he was mentally prepared for this moment and considered such happenings as part of the game. Luckily, Tome knew about Benjamin Graham and remembered that the bear case is the best case. Instead of acting like a pessimist, he began shopping for the stocks at cheap prices. He took the stock market crash as a potential opportunity to accumulate his wealth. And astonishingly, after noticing substantial growth in his wealth, he noticed that his current status 1 year after the crash is a lot better than what he used to earn before the crash. Then when Alex turned 33, his portfolio was contributing more towards his savings than his salary ever could. Now Alex decided to buy a house because he remembered that even Warren Buffett spent 10% on his house. When Alex turned 35, he switched his job to a greater company which paid him 20% more than what he was earning. But still, his portfolio was contributing more towards his savings than his new salary. Alex decided to stay true to the process and he did not rush any investing decisions. He was growing in confidence and now he was accumulating even more wealth. While many of Alex's colleagues were focusing on increasing their working hours, Alex was spending that time on studying and analysing stocks, and soon that paid off. Alex was slowly becoming that investor who would beat the market by some margin each year. Stage 4. Alex's financial freedom. The day arrived when Alex could live off his investments and he could quit that 9-to-5 job. More than half of that money came from his return in the stock market. His investments helped him achieve his financial freedom earlier. Alex earned some time for him that is the most valuable asset in the world. With this type of money coming in, Alex was now confident that this money could cover his expenses. Now Alex was free of all kinds of financial stresses and he could finally afford to live peacefully. Alex is now spending more time doing the things which truly make him happy. He enjoys going on hikes, he is improving his photo skills, and he is also taking yoga classes. Alex turned his life around due to his perseverance and patience. But if you're looking to start your journey in stock market investing, start by learning about the 6 stock categories that are each different to analyze. Take a look at the free ebook in the description below. So what do you think about Alex's journey to financial freedom? How do you plan to achieve your financial freedom? Let us know in the comment section below. Subscribe and turn on notifications. Check out this video we handpicked for you and we'll see you in the next one.